Thank you, Mark, and hello from London. When I started going through the markets on Sunday night to see which had made weekly key reversals, it slowly dawned on me that perhaps, just perhaps, there would be no weekly key reversals in these markets at all. You see, there were no weekly key reversals in the currency markets, none at all. In the FX markets I cover, which is a very unusual situation to say the least. Anyway, the FX markets are where I started and moved on to the financial and then on to commodity markets, where I was starting to get a little concerned as to what I would write about, as there seemed to be no weekly key reversals about. The nearest I came to one was when I looked at the London Metal Exchange metals and saw an outside week in LME 3-month copper, but still no weekly key reversal. Then I came across the first weekly key reversal from last week in LME 3-month nickel. It was a weekly key reversal up in a market that I have already made extensive commentaries here in the Wednesday weekly commentary, and also in the metals commentary I make each week on Tuesdays. The reason I'd already commentated upon nickel before is the two huge monthly patterns the market made in recent months, and the huge diamond pattern the market seems to have constructed. Now, to start with, the monthly patterns. We had a monthly key reversal down in September. This is a notable pattern. However, there was no longer term follow-on lower to this pattern, not even an attempt at one, as the very next month, in October, the market made an unusual, but as a technician, welcome to see, immediate countering monthly key reversal up. Now, immediate countering monthly key reversals up are not that common, but also not that unknown. What was uncommon here was how it was done on a monthly basis rather than on a daily or even a weekly basis. Thus, this was a very strong counter-bearish, pro-bullish action at the end of November. These 2 months also set up the opportunity for the next potential pattern that the market is currently working its way through. And that is a very, very large, huge if you will, diamond pattern, formed originally since mid-June and running now until the end of January 2022 or thereabouts. Coming back now to the present, last week's weekly key reversal up had initiated a move higher, which we have seen followed on quite effectively this week, and which is now approaching the upper downtrend trend line, currently at 20,910 of the diamond pattern. Breaching this, and by that I mean a well-confirmed breach, a break, will mean many significant implications for at least the first half of 2022. Now, I have others I want to talk about, but please take a look at my combined LME nickel and zinc video from yesterday for more details on this interesting market. There were only 2 other weekly key reversals last week. Spot platinum had a weekly key reversal down. This was interesting, as both 6 and 8 weeks prior the market had made weekly key reversals up in those 2 weeks, which subsequently made and saw a nice move higher. That was until last week, when the market turned around, right around, with this weekly key reversal down. Now, this week so far, we've had a more than suitable follow-on lower to last week's pattern, and verified this market as having good moves based on technical analysis patterns. The last one is a less well-known market, though I have mentioned it here before. It is EEX European Butter Futures. We had a weekly key reversal up there last week, if only just. This coming as it did after the huge 15% move up in just 1 week, and most of that within 1 day, made 4 weeks ago. So far this week, we've had a suitable follow-on higher, making new highs not seen since August 2018. I should note that the whole recent move up was prompted by a not dissimilar situation to LME 3-month nickel, in that at the end of July we had a weekly key reversal down, which then prompted an immediate countering weekly key reversal up the following week in August. This was the start of the current move higher, when the market was then trading just under €4,000 per metric ton. We had a settlement price yesterday of 5,475 euros. A gain of about 37% in 3.5 months. Well, impressive. Now, the last thing I wanted to update you on is perhaps a series of products that I have been talking about now for weeks. It is, of course, Baltic freight indexes. These have been some of the major market movers in recent weeks. The Baltic Exchange Panamax Index had, if you remember, a weekly key reversal down that I pointed out here 4 weeks ago. At the time of my initial broadcast, the market had dropped about 16%. 2 weeks ago, it was down from its height by about 28.7%, what looked like at the time signs of leveling off. Well, that leveling off lasted only 3 sessions, and we ended up last week down about 47% from the highs. Effectively, the index has lost about half its value in just under 4.5 weeks. Now, I had pointed this out as a danger last time with a possible move down to low 2000s due to the hesitation the market made 2 weeks ago, possible halfway hesitation, and the possible double top pattern made since mid-June. Last night, the index settled at 2333. Now, cryptos could learn a lot from this market with regard to volatile and heavy moves. I'm also waiting to hear more about the casualties that this market may have had on the way down. That's it for this week. I'm always happy to answer any questions with anyone who is interested, and with that I'll finish this section from London. I hope you found these comments useful.